And to learn a bit more about where the stock market is heading, I spoke earlier with Theodore Shou, Chief Investment Officer at Skybound Capital. Theodore Shou, welcome back to Money Talks.
Thank you for having me.
Now, we're in the year of the ox, but you can't exactly call the stock markets bullish at the moment. The Shanghai Composite, for example, started the year around 3,700 points, and now it's closer to 3,400. What's going on?
Since mid-March last year, the overall market has been in a bull rally, and I'm not just referring to China A shares. Pretty much global equities were very bullish for a long while without any meaningful correction. And this is exactly why I call this correction long overdue. But so far, I think it has been very healthy. We have seen certain names giving back a lot of gains they recently had. The correction we are seeing in the main board in Shanghai Composite will definitely have a spillover effect onto the other peripheral markets, including China X was always the higher beta version, the higher levered version, and it shouldn't surprise people that it is giving back more during these corrections as well.
And we also instead see people shifting into lower valuation stocks. Is this an inflation-linked issue? Is this just people, suddenly realizing that what they've invested in is way too high?
We are seeing a lot of sectoral rotation at the moment, and such sectoral rotation are not literally related to sectors. It could be market cap related. It could be a specific niche market related. So being in COVID, people tend to go along with either the very high growth names in the technology sector, which actually literally benefit from COVID. And at the same time, people also tend to go along with the defensive names like the consumer brands. But now I think a lot of investor interest are shifting towards the sectors that actually will benefit more from an economic growth. So if we look at building machineries, excavators, they all go up significantly. So are the stocks in those sectors.
Are we going to see money continue to sort of pile into these names, into banks, into construction sectors, for example?
So the names and sectors that are appearing to be very resilient today are normally the ones who actually underperformed significantly compared to the rest of their peers. And the names that corrected most today were the outperformers, were really bearing the entire market of yesterday. Therefore, the relatively lower valuation names like the banks, etc., they lost all the attention from investors in the past. But now I think it is their turn to shine, and also the lower valuation is attractive itself. More importantly, these are usually larger caps. I don't think the Chinese economy is going through any difficulty now, and I think we are on the right trajectory to very good growth. And all sectors should benefit from this.
Are we going to see the market bottom out soon, or have we, has it hit its low point yet, or can we expect more correction to come?
I think it doesn't make much sense for investors to call whether the market will go up or go down. It makes a lot more sense for investors to focus on companies that can actually do well. And you will see big dispersion across the board between the good ones and the bad ones.
Theodore Shou, as always, thank you so much for joining us.
My pleasure.